What's up everybody, Nate here, and the United States is currently barreling towards one of the largest economic collapses in our nation's history. From the cost of living to unemployment and even prices going up faster than they basically ever have before, the average American has a lot to deal with right now. Consumer confidence is in the gutter, which is leading to a massive slowdown in spending, which is also trickling into our business sector and Wall Street. And all of this means a systematic failure of our entire US economy. Now, there is two major problems that are going on right now. The first has everything to do with inflation. Inflation has been decreasing the buying power of a lot of Americans' dollars for the better half of the last century. Even before the pandemic, Americans had been complaining that they weren't making enough at their jobs, and they were complaining that the middle class was shrinking. Basically, what they mean by that is the average American no longer can get by. They have to take on more hours, they have to get a new and better job in order to meet ends meet, and that means that there is no such thing as the middle class. This entire issue got even worse over the last few years because the buying power of Americans' dollars suddenly became a whole lot lower very quickly as the United States government printed a lot of money. We had around $3 trillion in circulation in 2020. Today, we have over 20 trillion. So there is a lot of dollars out there, and when you have a massive increase in a country's monetary supply, you're going to have big time inflation. Now, what does big time inflation actually mean? Well, if you look back in our nation's history, the last time we had sky high inflation like this, it was the 1970s. And up until the 1970s, the average American was seeing the middle class actually grow with consistent pay raises every single year. The 1970s in the United States, when we saw this massive influx of inflation, was a very interesting time in American history because this was also a time when most Americans were working hard, and that is how many of them actually made their money. It was through their labor that they created a lot of wealth, and that made a lot of sense during that time because all of these massive industries that are now multi-billion-dollar corporations were a whole lot smaller at that time in the United States, but something else was starting to grow. Automation was taking over in the 1970s. We had big advancements in technology, so that way businesses could now produce a lot more things, but that was a pretty bad deal for the average worker. It sort of devalued what those workers were producing, so now they went into work, they made a lot of goods, but the company was making a whole lot more, and when you make a whole lot more money, that means there's going to be a lot more money out there, i.e. inflation. The reason I go back specifically to the 1970s is because there was one other major thing that contributed to that massive inflation spike, and that was the United States was taken off the gold standard by President Nixon. Up until that point, if you had United States dollars, then they were backed by a tangible asset like gold. So you could literally exchange the amount of US dollars that you had for the tangible asset of gold. But in terms of an economic standpoint, this wasn't really good to expand very quickly, right? Because you had to have gold to match one for your US dollar. If you didn't, then you couldn't outprint what you had in gold. So with the United States taking themselves off of the gold standard, that meant that they could expand faster than ever because now they had nothing holding them back. They didn't have that tangible asset. They didn't need gold anymore. They could literally print at an unlimited amount. So the United States began printing money. They printed and printed and printed, and to their credit, we have seen massive innovations in technology, and there are brand new careers and brand new aspects of our economy simply because we have a lot more money now. But with every problem that printing has solved, a new problem has started because of it. Inflation growing at such an expansive rate in the 1970s meant that Americans didn't have the money to pay their bills or to buy things that they needed or wanted. So the solution for a lot of Americans was to just work harder. They took their time and hoped that that translated into more dollars, and to their credit, it did for a little while. Americans got second jobs, and this is when we saw a huge push for women to actually join the workforce in the 60s, 70s, and 80s. But part of the reason for that was because American families could not not survive on one income anymore because inflation was getting out of control, because things cost way too much. That meant that you needed two incomes in order to buy things. I'm sure you can see the parallels for what's happening today. Inflation has expanded aggressively again today. Inflation is well over 6%, slightly down from 9.1%, but still way highly elevated, which means Americans are not making enough money in order to get by. You gotta remember too, a lot of the traditional jobs that Americans had in the 70s and 80s, well, technology has advanced, but a lot of those jobs are still very much the same. So that means they pay the same, which means the amount of money that you are going to make as, say, a roofer in 1970 is going to be similar to what you're going to make today, except for if you made 40K back then, 40K today is not going to get you as far. And what you're probably thinking is, well, if we had this big expansion in our economy, then why aren't workers getting a lot of this money? Well, part of the issue is all of this money has gone towards investments and building up the company just in general. So I like to use McDonald's as a really good example here. McDonald's pays their workers between something like $12 and maybe $16 an hour, depending on what position you have and what state you live in. McDonald's is one of the biggest companies in the world, right? So it has so many different locations, which means it has a ton of different workers. It has hundreds of thousands of workers all throughout the world, which means it has to take a way to kind of divvy up its revenue and funnel that into a lot of its employees. And because it has so many of them with insurance packages and a ton of other costs to consider, it doesn't give its employees a ton of money. If it did, it would essentially not be able to expand as quickly. If it doesn't expand, then it's not growing in revenue. And if it's not growing in revenue, then investors are not going to want to invest in that company because it has hit its plateau, which means that company has peaked. So in an effort to grow even more, companies put their money into growth and investment, and they only pay you based on what they think that position is valued at. So the vast majority of this inflated money has gone towards a lot of those investments. And like I said, that has created a lot of jobs all throughout the world. But what it's also meant is that workers are only making $12 an hour. Now, if you think in the inverse, if McDonald's wasn't focused on growth and had just a few thousand locations, well, now it would be able to pay a lot of its workers a lot more money because it doesn't have as many costs and it's not really focused on growing super expansively. So this really just comes down to capitalism and sort of the mind of the entrepreneur and the founder of that company. What do they want to do? Do they want to have this big global empire, or do they want to have just a few locations to make some honest profit? That is sort of the first reason, right? Americans' paychecks are getting eaten away by inflation every single day, which means the middle class is shrinking and they don't have enough money to grow our entire economy. The second major reason is debt. So with Americans going for a second job in order to make ends meet or trying to get things that they want or need, they have had to lean on debt in order to get that done. At first, when you had that big inflation problem in the 1970s, I think Americans were leaning on debt as a way for them to try to make ends meet. And I think this entire debt monster has kind of gotten out of hand as now Americans increasingly rely on debt for pretty much everything. It has been sort of cemented in our culture that if you don't have the money for something, well, that's okay. You can go ahead and buy it anyway with the use of debt. Now, debt itself isn't really a major problem, but over time it creates a whole slew of other problems because it holds you back from creating more wealth in your lifetime. The more debt you take on, the harder it is to save money, the harder it is to invest your money, and the harder it is to manage your money because debt is really the only thing that you're spending your money on. Obviously, there's going to be some things that you have to finance and take on debt for. Like, nobody has hundreds of thousands of dollars sitting around just to buy a house, but debt should not be the end-all be-all answer to all of your financial problems. And it really just comes down to needs versus wants. There are certain things that you need in this world, and there's certain things that you just want. And for things that are just wants, you should definitely not be spending on a credit card in order to get them if you don't know how to use credit cards correctly. The same goes with everything. I mean, you might want a super fancy luxury sports car that's going to cost you a couple $100,000, but that doesn't mean that you need one. And going into debt over that is not a very good financial decision. But here's where things get really tricky. Americans sort of had this debt problem ingrained into our culture. So Americans Americans already have debt. Now, because they're not making enough money at their job, or maybe they recently lost their job, they're having to rely more on that debt in order to actually pay their bills, which is only furthering the problem even more and making Americans spend even less money to better our economy. Not to mention, all of that debt gets a whole lot more expensive as the Federal Reserve raises its interest rates to eliminate demand for spending in our economy. So with all that being said, here's where we stand. Inflation is eating away at Americans' paychecks, so they're not going to be able to spend as much money anymore. Meanwhile, the rest of their paycheck is getting eaten away by massive amounts of debt. And the question that we have to ask ourselves now is, when is all of this going to fall apart? The average American is in debt. The United States federal government is in debt way over its head. So how much actually becomes too much? What is the breaking point for taking on too much debt? Well, that is what I think we are going to find out over the next few months and years. We're going to find that breaking point as Americans become unemployed, spend a lot less money because of inflation, and can no longer make any of their debt payments. Debt is going to be wrapped up in a lot of your businesses. It's going to be wrapped up on Wall Street. It's going to be wrapped up into banks, and all of these institutions are going to start bleeding cash because nobody is making their payments. That's what we saw during the 2008 crash. People were foreclosing on their mortgages, and now hundreds of billions of dollars was bleeding out of Wall Street investing institutions and banks. That could be where we're headed next, because Americans can't just continue to borrow and borrow and borrow and have their wages continue to shrink by inflation every single day. Eventually, the average American is going to be way too far in over their head. They're not going to be able to continue to borrow forever. Something's gonna have to give. And at the end of the day, the baseline for buying pretty much anything is also going up. And like I said, the big issue here is that American wages and Americans themselves just are not making enough money in order to meet the new standards of our economy. The average price for a house is only going up. Same with car prices. Food prices, while they might slow down in price, they are not going to decrease in price pretty much ever. So unless Americans make a lot more money, they're going to be trapped in this financial circle, and eventually that could collapse our economy. So the key here is to not say that the entire United States is doomed. No, there is a way out. In the 1970s, our entire economy worked very differently, right? So the economy was based on your labor and the amount of hours that you put in, and there was a clearer pathway towards wealth. Things are different now, but I would argue just as simple. Now, wealth is not created in actually producing things, it's in owning the means of production, and you do that through investing, which is open and accessible to pretty much everybody. There's a potential that our economy could collapse, but our economy is still going to exist. There's still going to be wealth out there for those who can get it. The stock market is still going to be around. Our economy is still going to be around, but you have to find new ways to sort of get ahead in this economy of today. And to be clear, nobody knows for sure if the economy is going to collapse. But our entire economy always goes through these booms and bust cycles, and it looks like we might be headed for a bust, but that doesn't mean that you have to suffer because of it. There are always ways to thrive if you have the right mindset. And the parameters for financial success in this economy are very much different than they were 30, 40, and 50 years ago, but success definitely is still possible if you understand how the system works and how to actually make and produce wealth in this economy. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.